Hello and welcome to Market Today. I'm Siddharth Zarabi, and with me to discuss the third quarter performance is Ganapathy Subramaniam, the Chief Operating Officer and Executive Director at Tata Consultancy Services. Thank you very much for joining us today, Mr. Subramaniam.
Good morning,
Good morning.
Siddharth. Nice to be here. Happy
Thank
New
you.
Year to you and your viewers.
Happy New Year to you as well from Delhi. It's a bit fogged out, but a crisp morning in January. And I want to begin, Mr. Subramaniam, by asking you about your sense of the results that you have just logged in. The headlines clearly suggesting that December has been a slow quarter, but you have kind of logged better growth than peers. Your key takeaways from the third quarter performance.
I think we are extremely satisfied with the way the December quarter panned out for TCS with a good deal momentum of $8.1 billion for the quarter, coming on top of three successive quarters of 10 billion plus, deal value. This particular $8.1 billion has also come broad-based without any mega deal support, which means that these deals are small to medium size, both in terms of value and tenure, so that these get executed well in the next 12 to 24 months, which augurs well for the FY25 growth for us. We are happy with the fact that, look, manufacturing, power utilities, and the energy and utilities sector are doing well, and all the regional markets, including India, Middle East, and Asia Pacific, all of them registering a very good growth for us. Banking financial services is impacted by seasonal furloughs, and also in the last quarter we completed two large programs for two of our large clients. That has resulted in a degrowth in the banking financial services sector, which should actually pick up well in the coming quarter thanks to the deals that we have signed. Overall, it's a very, very satisfying quarter. And we have also tested and advancing our own offerings on the generative AI front and cloud transformation embedded with generative AI and architectures related to that. So overall, very satisfying quarter from both intellectual perspective as well as client satisfaction and revenue growth perspective.
On the basis of the third quarter performance and the trends that you see, can you offer an outlook for the fourth quarter? Are there signs of a recovery, and what does that mean for the entire fiscal year, Mr. Subramanian?
I think the quarter four will be better than quarter three, is what my sense is. But then, this particular financial year, we have had a huge headwind in terms of macroeconomic and other factors over the last three quarters. So FY24 would be a very muted in terms of the overall growth compared to FY23. But I think, FY25 should be a better year than FY24.
And when you say FY25 will be a better year, this is on account of your sense about the domestic market or the global slowdown, perhaps, the impact lessening?
No, I think the way to put in is, there are uncertainties, no doubt about it, and we have learned to enjoy the uncertainties, number one. Number two is that the regional markets, the India market, specifically some of the large programs that we are executing should do well. The regional markets, we see a good demand. The pipeline that we have seen in the last 2-3 quarters plus now, the deals that we have converted from the pipeline should all we should be able to execute it and clock revenue. That's the first one. The qualified pipeline that I see is also looking good. So, from my perspective, the North American market is a bit weak at this point in time, and then they're looking for some positive signs. But UK and Europe is starting to grow, and then UK has actually done well for us for the last few quarters. Europe this quarter has, I think, is bottomed out, and we are seeing some green shoots. and that should do well for FY25.
One of the key features that is noticeable in the third quarter is on the margins front, the way it was managed, and that seems to be a key driver. Margins have beaten street estimates. Adjusted EBIT margin increased 70 basis points quarter on quarter, and on an annualized basis, 50 basis points to 25. What's the outlook on this front?
See, we continue to bring in efficiencies and operational resilience and operational excellence is something that TCS is known for, and we had kick-started that kind of a focus. Given that we saw some tentativeness in the revenue pickup over the last 2 quarters, I think this initiative will continue, and we should see improvement further in our margins from where we are today to the next one, barring any unforeseen circumstances.
Mr. Subramaniam, what is the deal pipeline outlook? Because it's clear that incremental revenue growth in the third quarter, almost a third of that came from the Bharat Sanchar deal, a big deal, and you have in the past said on this very show that it's going to be spread out. So some color on that, and whether there is any visibility that you can offer our viewers on future deal growth.
Overall, as I said, the qualified pipeline that we had at the end of Q3, when I compare it with the qualified pipeline that we have at the end of Q4, that value has actually increased. After securing this $8 billion of TCV for Q3, right? So, which essentially means that there is demand out there, and which we are participating in those demands, and we would like to convert each of the opportunities that are coming our way. Secondly, that BSNL is a very large program of national importance. We have stayed focused in executing it, and we're working very closely with the BSNL and our OEM partners. As you know, TCS is a system integrator in this whole opportunity. And with the OEMs and with BSNL, we have chalked out a plan to roll out an indigenous 4G and 5G network. We have started to do it in zones and some circles. And predominantly this quarter, we are focusing on North Zone and Punjab and Haryana circles, and the other circles are all opening up. It should do well, in the coming quarters, and it'll, like any other deal, it'll also follow a kind of a bell curve, and we have just started climbing up the bell curve. And over the next 4 to 6 quarters, it should get done. All the 100,000 sites for which we have received the order from BSNL, we hope to roll it out over the next 4 to 6 quarters.
What really is the focus of large clients overseas, especially? Are they still in cost control mode? Because post-COVID, we saw a certain kind of behavior and a mindset, and then cost control, inflation pressures. Was this, since we are talking at the top of 2024? What's your sense about how they will continue to think, and is a pivot possible, broadly speaking, where major clients in the Western markets are likely to say, let's go for growth again?
I think, first is the resilience focus is very important for most of our clients, specifically, whether it is the manufacturing or power utility sector, the supply chain transformation that they are all embarking on post-COVID. They are in advanced stages of completion. I think they will continue. They are continuing to invest in supply chain transition, and then those projects are on the way, and there is no depth of budget cuts or anything that we are seeing on that front. Likewise, investments in electric vehicles, batteries, and putting together digital twins and adopting digital technologies in the manufacturing power sector. They are actually seeing a peak, and they are continuing to do well, in these two sectors for these areas. All the other sectors, including manufacturing and this, there is always a cost and optimization focus. wherein all the maintenance and support kind of work that we are doing. People are saying that, look, why don't you optimize this by embracing automation, intelligence, as well as generative AI kind of technologies. So all round, there is a cost and optimization focus, no doubt about it. In those areas, what we have seen is that we are participating in vendor consolidation type of deals, and that gives us an opportunity to increase our market share in each one of these segments, which we have seen that our market share has gained in the Q3, and that trend will continue in Q4. On the growth and innovation deals, there's a lot more focus on innovation. They are testing out a lot of pilots and proof of concepts, embracing Gen AI type of technologies. The growth opportunities are limited currently to the deals that they have signed on cloud migration and cloud transformation. Real business transformation deals, I think there is a tentativeness around it, and I think in the next 2 quarters, I hope that will get eased up.
On a side note, I was reading somewhere that a lot of businesses seem to be asking questions at the beginning of 2024 regarding the immediate, cash impact, profit impact from AI. Is that a sense that you would share, or are companies prepared for the long haul for AI to deliver results?
I think there will be a bottom line impact on the immediate basis, in the sense that the AI technologies are being employed to gain productivity as the main focus and main lever at this juncture. So that should lead to bottom line impact, and that's okay, right? But then how these technologies are going to pan out in, let's say, the front office, customer experience, and integrating into ecosystems a lot more seamlessly. Those kind of efforts will take, I think, in a few quarters. So the way that we have conceptualized this whole particular technology is, there are three waves. First wave is assist. The second wave is augment. The third wave is transform. Currently, many of these work that we are doing is in the assist area, where the technology is being exploited to deliver efficiencies by whatever we are doing. Can we do it efficiently? Can we do it better? That's the kind of focus in the assist area. Then it will become augment, where these technologies will benefit in generating or creating cobots, by which it will supplement the work that you are doing, and it will provide certain amount of advice and assistance, or enhancement in terms of the ability for you to make a decision making. The third one is really the transformation, where it could become, let's say, self-managing and self-governing, and really leapfrogging itself for delivering the business growth and business impact that they are seeing. The third wave, I think we are probably 4 to 5 quarters away.
All right. Okay, that's a good outlook on that. As we wind down this conversation, one point about headcount, and there's been a continuing decline in headcount almost by 1.7%. Do you expect this reduction to continue in the fourth quarter, or at some point you will have reached optimal levels of staffing given the overall business volume?
We had actually, hired a lot more than what we needed in the last few quarters, and now our approach has been to see how that capacity can be effectively utilized. And in that context, that we have not hired many people, even though in this quarter as well, we continue to look for key talent, and such talents that we have a competency gap. Those talents are being hired. And our approach, Siddharth, has always been, organically grow our talent. So we have integrated the number of people from the universities who are supposed to join us in FY24. A majority of them have joined. That are going according to plan. We've also started the hiring process for the coming financial year. We have reached out to the campuses, and we are one of the top recruiters in the universities of fresh talent. So overall, I think we are performing, I should say, a balancing act in on one hand improving the efficiency that we have. Second is that keep reducing the bench and put them into productive engagements. And the third is continue to look for key talent from the market as well as from the universities.
One very final point, and I don't know if you've been informed of this or if you've noticed it, but one of the most trending keywords after your results announcement has been the dividend announcement. A quick comment about that dividend, because clearly a lot of market participants have been searching for information related to that.
I think we have a capital allocation policy by which we have always said that look, 100% of the free cash flow that we have is something that we would return to our shareholders, and it is in line with that. I think we had done a buyback the last quarter. I think it has gone really well. And then we felt that look, what the cash that's available, what the free cash flow that's available, and there are instruments like buyback. The other instrument that's available is dividends, and then so one is the interim dividend. So we chose to give a special dividend, to be within the capital allocation policies that we have.
All right, Mr. Subramaniam, thank you very much for your time with us today and all the very best.